Today I want to talk about taxes from your personal name versus a limited company. There's often confusion when someone owns a company that's receiving income and they're also getting income in their personal name. What gets reported on a tax return, what gets reported in company accounts, how you're not double reporting, and ensuring that everything is super clear. So when you have a limited company, let's call it ABC Limited, this company is completely separate to you as an individual. So you are over here, see my stick man there. So ABC Limited is completely separate to you, the individual. ABC Limited can have its own assets, it can have its own liabilities, it can have its own income and its own expenses. So let's assume ABC Limited is a buy-to-let company. So ABC Limited will own houses down here. Now, these houses are not connected to you, the individual. They are owned by the company, and the company is owned by you. So we have this connection here, which is us, the individual, and the company here. Now, the company has its own set of reporting requirements. So the company needs to do accounts, and it needs to do a CT tax return, a corporate tax return. The income from these properties and the expenses you have get reported on the accounts and corporate tax return for the business. Once you know the overall situation of this company, you can decide what needs to happen between you and the business. If this company is extremely profitable, and maybe you've decided that you're not going to reinvest all of the profits and you want to start taking some income for yourself, then you may decide to send dividends this way. So dividends come from the company to you, the individual, and it's essentially a post-tax distribution of profits. So you, the individual, will receive dividends from this company. Now you, the individual, have to file a self-assessment tax return, right? Now on this tax return, you need to report all the income that comes to you. So also coming to you from this side could be your PAYE, so your main source of income, your job. So now if we just take a little look at what we've got going here, we've got the individual that owns ABC Limited and has a PAYE job. The income is coming in from their employment and they are getting a dividend from ABC Limited, meaning this tax return will include the PAYE income and the dividends. So this is what will be reported on the personal tax return for the individual, and on the company will just be the properties and the accounts information. Now, there's also occasions where the individual will need to send money the other way. The company could start struggling, you may have costs you didn't expect, you may have a tenant that stopped paying rent, but you still have the mortgage to pay, etc. So typically, what we call this is a director loan. So now, you might have to send some cash this way, right? From you to the company. So now, what's happening here, and not to overcomplicate this document, this board, is that the individual is putting money into ABC Limited. Now, if you are doing a director loan, the chances are you're not getting any dividends, right? So in this scenario, the company is taking a director loan from you. On the company accounts, it's going to get reported that ABC Limited owes you X amount of money that you have put into the business. Now, what's really important in this scenario is when we come down here to your tax return, you don't need to do any reporting from this perspective because there's no income coming to you from the company, there's no profit distributions, you're not on a salary, you're only getting your income from the PAYE. So on your tax return, you would only have the PAYE income. And of course, you would only have to do a tax return if your earnings are over £150,000. If not, then you can scrap all of this completely and you'll just be left in this scenario. So hopefully that gives a basic understanding on how it works from an individual perspective and a company perspective if you have a company owning property.